Once the backbone of American prosperity, the working class now faces falling wages, precarious employment, and rising living costs. As manufacturing weakens and debt replaces income, the middle class shrinks significantly. This crisis reveals a capitalist economy that prioritizes labor over capital, leaving millions trapped between survival and decline in modern American society. Listen to the full analysis for a clearer understanding. The camera glides over the rusted skeletal remains of a steel mill in the Rust Belt, once the beating heart of a nation's prosperity. This is the birthplace of the American middle class, a social stratum built on the promise that a single income from honest, physical labor could secure a home, a car, and a future. But as the sun sets over these silent giants, we are forced to confront a haunting reality. The middle is being hollowed out. We begin with a quiet, structural disappearance. For decades, the gap between productivity and wages has widened into a chasm, redirected by the invisible hands of automation and globalized capital. This is not a sudden collapse, but a slow, calculated extraction. We are witnessing the hollow middle, a systemic shift where the economy no longer functions as a ladder for the many, but as an elevator for the few. As the cost of living climbs and the stability of a lifetime career vanishes, we must ask, what happens to a superpower when its foundation turns to dust? The American working class is not just shrinking. It is being re-engineered into a precariat, trapped in a cycle of debt and service. The engine of social mobility has stalled, and in the silence of these empty factories, we hear the first echoes of a profound national crisis that math alone cannot solve. The signs of this erosion are no longer found in abstract data points alone, but in the physical landscape of America. We see it in the retail apocalypse that has gutted suburban malls and the proliferation of payday lenders that have replaced traditional banks in working-class neighborhoods. Economic indicators tell a story of profound divergence. While the stock market reaches historic highs, the labor share of income is at its lowest point in the post-war era. Real estate has transitioned from a utility for families to a yield-bearing asset for global investors, driving prices to levels that require 2 high-income earners just to afford a starter home. In the hollow middle, liquidity is a constant struggle. We see it in the rising delinquency rates on auto loans and the mounting medical debt that serves as the leading cause of bankruptcy. The sign of crisis is the quiet desperation of a generation that is working harder than ever but falling further behind. It is the realization that the cost of living is no longer a hurdle, but a wall. As the exchange rate of human effort for a stable life continues to deteriorate, the social fabric begins to fray, manifesting in a loss of trust in every major institution, from the local school board to the federal government. The mechanism of this economic shock is driven by the financialization of the real economy. Over the last 40 years, the US has shifted from a manufacturing power to a debt-based service economy. When the Federal Reserve adjusts interest rates, it isn't just tweaking the cost of money. It is recalibrating the survival threshold for millions of debt-leveraged households. The shock occurs when the cost of capital rises faster than real wages. This creates a liquidity trap at the household level. As inflation eats into purchasing power, families turn to credit to maintain their standard of living, creating a precarious mountain of debt that is highly sensitive to any systemic tremor. The architecture of the hollow middle is built on just-in-time labor and gig economy platforms that shift all the risk from the corporation to the worker. When a global shock hits, be it a pandemic or supply chain failure, these workers are the first to be discarded, with no safety net to catch them. The mechanism is a relentless ratchet effect. During boom times, the gains are captured by asset owners through rising equity. During busts, the losses are socialized through labor cuts and austerity, ensuring the working class never truly recovers their footing. Global history provides a grim mirror for the American working class. In the 1997 IMF crisis, we saw how the sudden flight of capital could evaporate a nation's middle class in a matter of weeks. A warning that prosperity is often more fragile than it appears. In Argentina, the death of the middle class occurred through repeated currency devaluations that turned a once wealthy European-style society into one defined by extreme inequality. Greece offers a modern case study of fiscal strangulation, where a nation's workers were forced to pay for the bad bets of international banks through decades of lowered wages and decimated public services. Turkey and Venezuela show how hyperinflation acts as a social eraser, effectively removing the distinction between the middle class and the poor by destroying the value of saved labor. These cases demonstrate that a hollow middle is the hallmark of a rentier state, a society where the economy is designed to extract rent rather than reward production. For the American viewer, the insight is chilling. The economic indicators currently seen in the US, rising debt to GDP, stagnant real wages, and extreme wealth concentration are the same markers that preceded the collapse of middle classes across the globe. The impact on the US economy is a fundamental loss of internal demand. When the working class can no longer afford to consume the products they produce, the economy becomes dependent on asset bubbles and foreign debt to sustain growth. We see this in the skyrocketing valuations of tech companies and luxury real estate, while the Main Street economy of small businesses and local manufacturing continues to wither. This creates a dual economy, a high-tech, high-wealth sector concentrated on the coasts, and a hollowed-out interior characterized by deaths of despair and declining life expectancy. The credit default swap CDS on the American dream is effectively being triggered as the younger generation recognizes that the traditional path to stability is broken. The real estate market has become a barrier to entry rather than a source of wealth, as private equity firms outbid families for single-family homes to create a permanent renter class. This shift drains the velocity of money, as the wealthy tend to hoard capital in unproductive assets, while the working class has no excess income to stimulate local commerce. The U.S. is becoming a maintenance economy, where we are simply managing the decline of our legacy infrastructure while the engine of genuine innovation and broad-based prosperity slowly starves. Government and central bank responses have often exacerbated the hollowing of the middle class through a policy known as financial repression. By keeping interest rates near zero for over a decade, the Federal Reserve effectively penalized savers, the hallmark of the working class, while subsidizing the leveraged buyouts and share buybacks of the elite. This monetary regime drove up the price of assets like stocks and real estate, creating a wealth effect for those who already owned them, while leaving the laborer further behind. When inflation finally surged, the response was to raise interest rates, which disproportionately crushed the working class through higher credit card and mortgage costs, while the cash-rich corporations remain largely insulated. Government austerity measures often target the very programs, education, public transit, and vocational training that allow for social mobility. The tax code also reflects this bias, as capital gains, wealth from owning, are taxed at a lower rate than ordinary income, wealth from working. This institutional preference for capital over labor ensures that any government response to a crisis serves as a floor for the markets, but a ceiling for the worker, cementing the hollow middle as a permanent feature of the American landscape. Personal survival in the era of the hollow middle requires a shift from careerism to strategic self-reliance. In an economy that no longer rewards loyalty, the worker must view themselves as a micro-corporation. This involves diversifying income streams and moving away from a single point of failure in the job market. The personal survival strategy is about asset acquisition on a small scale, owning your home outright, investing in tangible skills that cannot be automated, and reducing non-productive debt. Financial literacy is the only defense against the inflation tax and the debt trap. The useful insight for the viewer is to recognize that stability is an illusion sold by a system that requires your perpetual labor. To survive, one must lower their burn rate and move as much of their life as possible outside the rent-seeking economy. This means prioritizing local resilience, supporting local food systems, building community credit unions, and fostering networks of mutual aid. In a hollow middle economy, the most valuable currency is no longer the dollar, which is being devalued, but autonomy, the ability to exist and thrive without being entirely dependent on a system that has fundamentally abandoned the worker. The remarkable closing message of this documentary is that the death of the American working class is not a funeral, but a final warning. A nation cannot long endure when the people who build it, serve it, and protect it can no longer afford to live in it. The hollow middle is a structural failure that threatens the very foundations of democracy. However, the history of the 20th century shows that when the working class is pushed to the brink, it possesses the power to demand a new deal. We stand at a crossroads. We can continue down the path of a neo-feudal society of landlords and serfs, or we can rebuild a productive democracy that rewards work over speculation. The lesson for the viewer is that your economic value is not what the market says it is, but what you are willing to fight for. The death of the old model is an opportunity to create a new one where technology serves the laborer, where the tax code favors the maker, and where the middle is once again the solid, thriving center of the American experiment. The hollow can be filled, but only if we choose to value the sweat of the brow over the yield of the portfolio. The future of America is not in its boardrooms, but in its workshops, its classrooms, and its homes. As we zoom out from the individual struggles, we see the societal scarring left by the death of the working class. It is the loss of social cohesion and the rise of extreme polarization. When people feel they can no longer win by the rules, they start looking for leaders who promise to break the rules. This is the ultimate systemic risk. The impact on a person's life is the transition from citizen to economic unit. We see it in the loneliness epidemic as people work multiple jobs and have no time for community, and in the declining birth rates as the next generation views children as an unaffordable luxury. The insight here is that an economy that doesn't produce stability is an economy that is failing its most basic human function. The hollow middle is not just a financial problem, it is a spiritual crisis. To heal the nation, we must restore the dignity of labor. This requires more than just higher wages. It requires a seat at the table, a stake in the ownership of the nation, and a return to an economy that is human scale. The death of the working class is a symptom of a system that has lost its way, forgetting that the purpose of an economy is to serve the people, not the other way around. We conclude this investigation with a vision of a restored foundation. The story of the hollow middle is the story of a nation that took its prosperity for granted and allowed its middle class to be sold off, piece by piece. But the architecture of collapse can be replaced with the architecture of resilience. This requires a radical reinvestment in domestic production, a tax reform that targets extreme wealth concentration, and a monetary policy that prioritizes the real economy over financial markets. The remarkable message is that the power to change the trajectory lies in our collective hands. The American working class has been written off before, only to rise and build the most prosperous era in human history. The death we see today is the death of an unsustainable model of extraction. From its ashes can grow a circular economy where the worker is the owner and where the middle is no longer a hollow space, but the vibrant, enduring heart of the world's greatest republic. The documentary ends with the sound of the factory whistle, not the ghost of the past, but the herald of a future where work once again means wealth, and the American dream is no longer a haunting memory, but a lived reality for all.